Hello and welcome to Module 6 Part 3. Today we're going to focus on succession planning. If you have a business or even if you're just thinking about starting one, it's a good idea to begin with the end in mind. Even if the business is very successful, tax can be a big driver in your decision making. We have also seen many entrepreneurs rely too heavily on a payday from selling the business without paying themselves sufficiently or preparing properly for retirement. Entrepreneurs give an enormous amount of time and energy towards the growth of their business. Most of them focus on making the company a success and rarely give any thought to succession until they are ready to move on. It's important that before they do, they take the time to protect themselves and their families financially. Succession planning is a process rather than an event, and the sooner you start, the better. Business owners should take the time to become familiar with the tax requirements and have a plan in place for funding a tax liability. Very often, a business owner won't know what the ultimate objective for their business is. This means working on your own personal balance sheet and the funds you might wish to extract from the company in order to live off them. There are 4 reliefs to remember: pension funding, entrepreneur relief, retirement relief, and business relief. Let me briefly talk through what each of these reliefs are. Pension funding. It is the belief of many entrepreneurs that the proceeds from selling their business will act as a pension to fund their retirement. This could turn out to be a risky move if the business unexpectedly runs into trouble. It's best to extract cash from a business while it is still profitable. The Finance Act 2022 introduced some important changes to the treatment of employer pension contributions into a PRSA. A business owner can fund their pension to €2 million without incurring punitive tax. They can also contribute €2 million towards the pension of any long-term employee. Entrepreneur relief. Selling the business and making a capital gain can be very efficient if the owner benefits from entrepreneur relief. The standard rate of capital gains tax is 33% on the gain, but entrepreneur relief allows a business owner to pay only 10% CGT on gains of up to €1 million, subject to certain conditions being met. This is a lifetime cap with the balance chargeable at 33%. To qualify for the relief, there must be a disposal of a qualifying business asset by a qualifying individual. Retirement relief. This is a relief from CGT which can be applied in circumstances where an individual is disposing of all or some of the qualifying assets of their business. It is not a condition that the owner must retire to qualify for the relief. Currently, if you are between age 55 and 65 and decide to hand the business down to the next generation, full CGT relief with no cap on the value may be available. The beneficiary must retain the business for 6 years or the CGT relief will be clawed back. Currently, from age 66, the relief is restricted to proceeds of €3 million. Effective from the 1st of January 2025, a €10 million limit will apply on disposals to children, and the age to which this cap will apply is extended to age 69. For family succession purposes, retirement relief can be preferable to entrepreneur relief because it can be far more generous. However, the qualifying conditions for entrepreneur relief are generally easier to meet, so it is often the only relief available before paying full CGT. Where a business owner is trying to realise value from their business or a business investment, and they do not intend to pass it on to a child, entrepreneur relief may also be more appropriate. Business relief. Business relief can apply before or after the business owner dies. A person retiring from their business, for example, can transfer ownership to their children, which allows the children to save on tax immediately and simplifies the inheritance process later. Business relief reduces the taxable value of a gift or inheritance of a relevant business property by 90%. The property could include unquoted shares or securities, which would qualify for the relief provided that the beneficiary satisfies one of the following criteria after taking the benefit. They either own more than 25% of the voting rights, or, for example, they control the company by owning more than 50% with other people, or they own at least 10% of the aggregate nominal value of all the company's shares and securities and have worked full-time in the business for the previous 5 years. When planning to exit or sell your business, there is a lot to think about, so we strongly recommend that you sit down with an advisor who can help you consider all the possible outcomes and design the most tax-efficient outcome for you and your family. Exiting a business is almost as important as setting it up, so take your time and begin with the end in mind. And that concludes Module 6. We will be back next month with our final module. In the meantime, good luck with the quiz and please get in touch with any questions you may have.